Welcome, everyone. My name is Nathan Kolb. I am your host for these wonderful Credit Safe webinars, and it is my pleasure each and every week, sometimes multiple times a week, to bring you an expert, a thought leader, a practitioner, someone that is involved in the B2B industry that has a unique perspective in regards to what's going on in the economy, in their industry, in the B2B space overall. So like we do at every webinar, I want to give you kind of a rundown on how we do this. We want you to engage with us. We want you to ask questions. We want you to go back and forth and talk with our speakers and those type of things. So the way we do that is there is a Q&A button at the bottom of your screen here for the webinar. You can type in your questions, comments, what have you in there. I will be monitoring that the entire time. And as it's applicable, we're going to have a little bit of a presentation and an interview style thing going on today. So as that goes on, as those questions are applicable and I can put them in, I promise you I will get them in. We will get through any and all questions that you have as time allows. So just be aware that that's how you do that. Also, a couple things I need to make you aware of is that this is a recorded webinar. So if you are not interested in being recorded or being involved in that, not that we're recording you, but that you're being involved in that, please go ahead and exit at this time. And we will also be doing a follow-up email. So expect that. The email that you registered for this webinar with, we're going to go ahead and send you a follow-up email, not only thanking you, but giving you a recording, the access to the recording of this webinar so you can share it with any folks you think would benefit from this, as well as linking to anything that we talk about that has a web link or something like that. We'll put all of that in the email and the landing page that that'll direct you to. So know that that'll be coming out in about 24 to 48 hours afterwards. Today starts a new series for us that is in partnership with the National Association of Wholesaler Distributors. And this entire series between Credit Safe and the NAW is entitled Cash is Still King. The NAW, for those of you that are not familiar with it, the National Association of Wholesaler Distributors, is the national voice of the wholesale distribution industry in Washington, D.C. NAW provides high value to its members and the wholesale distribution industry by advocating the interests of distribution companies before the government, providing groundbreaking distribution-specific research and strategic management best practices via conferences, publications, and webcasts, and providing leading-edge products and services highly valued by industry peers. For those of you that are new to these webinars and new to us here at Credit Safe, as the world's most used provider of business intelligence, Credit Safe owns and maintains one of the most comprehensive and rapidly expanding business databases with credit information on over 365 million companies worldwide. We're changing the way business information is used by offering a collection of products and solutions that help companies leverage their domestic and international credit reports, company data, principal information, domestic and international judgments, and credit scores to make smarter business decisions. As I said, this is the first of actually a 9-part series focusing on 4 key areas of business that have changed due to the pandemic, yet have a consistent thread, the idea that cash is still king. Each area will have multiple webinars that feature experts, thought leaders, and practitioners to provide insights and analysis on how you can move forward in these uncertain economic times and make smarter business decisions. Today, we're going to start this series with the idea of knowing your customer. In today's business environment, it's critical to know and understand not only your industry or your products, but also the companies and the businesses that you do business with. I'm pleased to have with me somebody who knows all about this, who is an expert and a leader in that space, in this idea, Mark Edwards, who has been on this podcast multiple times and is probably our most featured guest here. But Mark is the managing director of Credit Safe USA. He's a registered global credit professional with over a decade of experience in the credit and business information industry. Mark's professional expertise focuses on portfolio management, credit and risk solutions, and business development for companies of all sizes and industries. Mark, as always, it's great to have you. I love having you on here, so welcome.
Thank you, Nathan. I appreciate being here. I do think we need to update that photo.
You know, you look a little different. You know, a few things have happened, a couple of years and maybe a little hair change since then. So yeah, I think it's probably a good idea.
First of all, Nathan, I'd like to extend my thanks to the NAW for setting this up.
Mm-hmm.
We've got a fantastic partnership that I think is going to be very beneficial for all of those involved, particularly the members where, they can utilize our services.
Absolutely. Yeah, it's been a great thing so far, and I'm looking forward to continuing that with them.
Excellent.
So, all right. So, know your customer. I know this is something you've talked about before. This is something you talk to the CreditSafe staff about a lot, and you talk to other businesses about. Why don't you just get me started? Give me kind of a concept, an overview of what this idea is, and just give us a baseline to work from.
Absolutely. So, know your customer, or KYC, as is more commonly referred to, are procedures or a function, should I say, that assess third-party risk. In some industries, there are a legal requirement to comply with anti-money laundering or AML laws, particularly in the finance space. Effective KYC involves knowing your customer's identity and their financial activities and the risk they pose to your business. The key function of KYC is to gain a deep understanding of the companies that you work with. Good KYC and due diligence will protect your business from the threat of financial crime, fraud, regulatory compliance issues, reputational damage, reduce credit risk, and without negatively impacting your customer experience. KYC can be split into two distinct processes, and I'm simplifying here. You have the onboarding of new clients. So whether you're evaluating merchants, suppliers, customers, measures must be in place to evaluate the risk of onboarding that business applicant. KYC policies require due diligence to know and to retain the essential facts concerning every partnership you have. So whether you're technically subject to KYC regulations or not, companies of all sizes are embracing the KYC procedures to protect themselves and their customers. KYC allows companies to protect themselves by ensuring that they're doing business legally and with legitimate entities. The second part of KYC is ongoing monitoring. So it's not enough just to check your customer once. You need to have a program to monitor your customers on an ongoing basis. The ongoing monitoring function should include changes in the company name, address, trading and legal status, credit and financial status, key people within the organization, and the corporate structure. In terms of how CreditSafe helps companies with KYC, CreditSafe helps customers with the information required to effectively and thoroughly conduct the due diligence process. Information within our products, and I'm going to jump into the product after this little section, can be broken down into 8 key areas. So first of all, you have the company identification. This will include legal name, doing business as name, location, address, and corporate addresses, business indicators, so whether you're active or inactive, phone and website, registration number if applicable, industry codes that include SIC and NAICS, the number of employees, incorporation date and the age of the business, and the legal form, so whether they're public, private, incorporated, LLC, etc. Then you have the second part is credit risk. So you have the credit score, which predicts the likelihood of the company becoming bankrupt or severely delinquent in the next 12 months, and a suggested credit limit. We also offer audited financials. These will include the latest of accounts and the currency in which the accounts are shown, plus the percentage change from the prior year. So you're able to determine whether the company is performing better or worse. Some of the other financial items will include profit before tax, net worth, total assets, total fixed assets, total current assets, total liabilities. Then we look at what we call linkage and ownership summary. So this will include immediate and ultimate holding company, and other subsidiaries and other linked companies. We also have the 5th section is legal filings. These include bankruptcy, suits and judgments, UCCs, and liens. We also give you the key people within the organization, or people with significant control. So that would include officers and directors, shareholders. We also perform, I'm skipping ahead here, sorry. The other section here is trade payment behavior. This is information that we gather from thousands of different sources that essentially tell us how well a company is paying its suppliers. And the final piece of this is compliance. So we perform sanction checks against an entity, sanction checks against a key person. We identify politically exposed profiles or persons, identify state-owned enterprises, and we also offer adverse media screening. All of this can cause a little bit of a problem. Ineffective KYC can place a huge burden on businesses, both in terms of cost and resources. I've told you this story before, Nathan, that I've been in the industry over 16 years. And when I first joined the industry, we were still faxing reports to people. So it amazes me how technology has changed the credit management industry over the years. It still amazes me, however, how many people are still using outdated and insufficient or outdated processes. Some of the other webinars that we've got coming up are going to dig into how people can use best practice. But pre-COVID, actually, in I think it was March the 13th, I was in Ohio. We're visiting some customers, and one of the common things we see is this room full of filing cabinets where people are still printing off these reports and keeping them in a physical document. So what we want to talk about over the course of this is the best practice and good, the best way to know your customer and stay on top, particularly if it comes to handling portfolios of significant sizes. Before we dive into, I've talked about the sort of conceptual KYC. Before we dive into the practical and what CreditSafe can offer, it's probably worth just talking about a couple of the benefits of good KYC. So the headline features are increased operational efficiency, reduced costly and manual processing, and allows you to make fast and easily interpreted, authenticated decisions. If you need to satisfy regulatory compliance, particularly if you're selling sensitive or regulated materials and goods, it's more important than anything to know who you're selling those goods to. It allows you to perform better during audits, using repeatable processes with minimal or subjective decisions without. You can utilize our depth and breadth of data to gain a complete picture of every single one of your clients, regardless of their geographical location. We can confidently investigate customers' identity elements without causing any customer friction. Requesting additional information from a client can sometimes, just cause issues there. And then reduce the risk of non-payment or delayed payments, and just leads to operational optimization. Nathan, I'm going to skip to our web product to show you how we can sort of put that into practice and the data that you can see. Do you have any questions before I do that and while I switch over?
Well, as you're switching, I mean, this is as you said, a lot of companies are coming around to this and doing this, but why right now? What is the big push that seems to be going on for folks to really pay attention to this idea of KYC?
There's lots of factors. Even without the current state of affairs, it's always best practice to know who you're doing business with first and foremost.
Sure.
However, there are increased regulatory issues, particularly as I mentioned in the finance space. This webinar is not meant to replace any sort of good legal counsel on the sort of regulatory issue. But what we do see, particularly in economic downturns, is an increase in fraud. So just being, if you're being approached by new businesses, it just makes sense that you know who you're trying to sell to. Right.
So a lot of different things, even, apart from the idea of a global pandemic.
Yeah. Nathan, are you able to give me permission to share my screen?
Yes, sir. That's easy. There you go. It is all yours.
Excellent. So I'm going to take you to the CreditSafe website, and there are other services that provide what we offer. And of course, we'd love to speak to you all about using our services. I'm going to search for a company that we're probably all familiar with, but I know it has the data that that we want to see. So let's search Microsoft. Basically, you hit search. We're going to give you a list of results. You would then determine the company that you wish to view. In this case, we're going to choose the headquarters location. And this is how you perform KYC. So as I mentioned, the first key area is the company identifying information. So you have the company name, other legal names, established dates, company type, the website, the telephone number. Then you're able to see if there are any financials. So obviously in the US, there's private companies don't file financials, but we have the public company financials. The payment behavior. So I'm going to skip back to the first screen. And if I'm jumping back and forth, Nathan, too quick, please slow me down.
I will.
How well this company is paying its suppliers. This is also a good source of information to independently verify that someone else is doing business with a company, particularly if they're new. We can see that we've got 1,087 other companies doing business with Microsoft. So you can rely on them that it's a trusted brand. As we scroll, as we scroll up, we talked about the linkages. So you have the ultimate holding company of Microsoft, but you're also able to drill down and view the full corporate structure to include subsidiaries as well. There you go. So you'll have all the subsidiaries within Microsoft, and this can work in both ways, either from the top looking down, or the bottom looking up to its parents and its ultimate parents. Bear with me. We have the risk score. So this is a proprietary scoring system that CreditSafe has created that predicts the likelihood of a bankruptcy or severe delinquency. We have then the officers of the organization. And then what am I missing here? Bear with me. Trade payment information we've done, and legal filings. So here you can view any UCCs, tax liens, any other suits and judgments. So this is essentially the check you would perform when onboarding that client. We also have the ability, and it's probably best for another webinar, Nathan, to monitor this company. So simply by clicking a button, what we'll do then is add this company to your portfolio. Should there be any changes to a company that changes your position with them, we will send you out an alert for you to reassess your position with them. So that's the sort of high level demonstration, I guess, of our reports.
Sure.
And that concludes my section there, Nathan.
Of course. Well, we do have some questions and some things that I want to just make sure that we go over as we're doing this. But with this idea, it's great to look at Microsoft or something like that. But this type of information is also available on smaller companies, larger companies that are privately held, those type of things, right? And they might not have all the same things depending on where they're located, but we have that same type of information, and that's the type of stuff we're looking for in KYC, correct?
Absolutely. So pretty much any company that's operating on a day-to-day business should exist in the CreditSafe database. There will be some anomalies where, if I left my job today and started up a new business, it might take a while to become on any credit radars, but we're searching all of the sort of, we've got our finger on all of the pulses to make sure that we're picking up as much of this data as we can.
Right. So like I said, we do have a couple of questions that I want to get to that are going on. So I'll take a minute just to do that. For the first thing is, what have you seen change in the idea of KYC or in the way CreditSafe does its reporting to help with KYC due to, in 2020, due to the pandemic?
I think a lot of people are just realizing how important it is. You've obviously got the KYC element of, I just need to know who I'm doing business with, particularly when we see that during economic downturns, the fraud increases. But the other benefit of the CreditSafe system is assessing credit risk, and that's our sort of bread and butter, if you like. So people are are operating with a lot of caution. We're seeing record number of bankruptcies and defaults. So people want to make sure that they're getting paid, and obviously the theme of this webinar is cash is king. So a lot of people are, choosing to make that investment.
Right. So another question here: have the scores changed at all due to the pandemic?
We have a series of webinars that are available on our website that talks about the actions that we've taken during the COVID pandemic to make sure that people are able to make informed decisions. CreditSafe made the choice not to update its scores and limits based on the pandemic. And the reasoning behind it is our model is designed to predict the good from the bad, and that still is the case. However, we have taken our analytics one step further and created a COVID score. This looks at macro and microeconomic factors, looks at industry payment trends, and just digs in a little bit deeper. So, for example, we're based in Allentown, Pennsylvania. There's a lot of restrictions on restaurant trades. They could be further impacted, but we haven't decided to impact the company score rather than release a new COVID score.
Right. And we have, like you said, we have webinars on that. There's landing pages on the website on how those two can work together in concert to give you a really good picture of, the health of the company overall, and it's the effect that the pandemic is having based on it. And those are both being updated all the time. So we're constantly feeding any new data that we get in there. And that happens literally thousands of times a day, that we're getting new pieces of data throughout the world. So, just to give a little bit more on that, folks. And if you want to know that, you can always go to our webinars page and check those out. Another question here. This is a little more technical. Do you have to click on monitor that you showed for the company to be monitored, or can you set up to monitor all companies that a report is pulled on?
Yes, I should have spent a little bit more time on the monitoring. I didn't want to, for this discussion to be a product demo. There's multiple ways of importing companies into our risk tracker tool or our monitoring tool. We can do a bulk import on onboarding. We can add companies ad hoc. So if there's a particular company that you're interested in, you can just simply press the monitoring button. Or there is a rule that you can change that every company you view gets added to the monitoring. Just while we're on the topic, Nathan, it's probably worth elaborating that the monitoring tool can be set up to include multiple or unlimited portfolios. So you can monitor your customers as one portfolio, your suppliers as another portfolio, even your competitors as another portfolio, just to keep everything segmented. And the rules that you have for each of those portfolios can be set up and managed by yourself. So if we were to dig down further into the customer base, the top 10 customers might have you want alerts on everything that goes on, whereas your smaller transactional customers, you may only want to know if there's a significant event. So you can set up and tailor those rules to your own requirement.
Right. And that really does play into the idea of KYC and how often you're checking on this and knowing those customers. Like you said, a great example is, those top 10 people, those top 10 clients. Let's really pay attention to them, or those problematic ones that have been troublesome in the past, or what have you.
Your digital filing cabinet. Basically, what happens is one of the questions we get is someone will phone in and say, "Okay, I got this credit report from 18 months ago. Now they're bankrupt. Why is this?" It's because they haven't done the monitoring in between. So the risk tracker is your digital filing cabinet.
Right.
I'm not sure if I made enough of a point on this, and I don't want this to be a sort of shameless plug. But we are inviting all of the attendees of the webinars, if they're looking for a personal demonstration of the website and product, please reach out to Nathan and we can get you set up with our experts and talk you through more in depth than I'm doing here on the specifics of the report. There's lots of features that I haven't shown, just in the interest of time, and there's lots of different ways of using that.
Absolutely. Yeah, folks, any questions you have after this, or any more that you want to know about these things that we don't cover, please just reach out to me. I'm the one that sends you the emails. I'm the one that sends you the follow-ups, all that type of stuff. You can easily get a hold of me, and my information's on there, so you can reach out to me at any point with that. But one thing I want to hit, and I just want to make sure as we're doing this so that we clarify a few things here. in regards to KYC, what are like a couple of, whether it's a couple or a few or what have you, best practices that are just good across every industry, just in business in general? What are those things that people should be doing or looking for?
It's amazing to me the number of companies that are not doing any KYC or due diligence. So just simply going on and doing a check is far more beneficial than a lot of companies are doing. But then to take it the one step further with the additional monitoring is probably sufficient to cover you guys.
Okay. So basically make sure you're doing it. And then for those that are those important customers or those portfolios that you're going to set up, just make sure you're getting that monitoring so that if something goes on, it's doing it. I'm sure some of these folks, especially some of the NAW folks that are on here, or came in through that. I mean, 1,000 plus, customers, we're talking maybe 5, 6, 8 digits. I don't know, huge amounts of customers there, and trying to monitor them manually would be really tough.
I've shown which you raise a good point there, Nathan. We talk about how I did a sort of transactional searching for a single company, and it kind of ties into Karen's question. We're also able to do a batch processing of this as well. So if there's companies that deal with thousands of different relationships, we can take that file and append all of this information and do a bulk or a batch KYC check on the entire portfolio. And that's something that's worthwhile considering as well.
Right. And that actually gives you both the macro and the micro level, so you can look at the whole portfolio as a total and see how your overall portfolio is going. And then you can drill down onto each company if it's something that you need to look at or deal with or just want to explore a little bit more. So that's a great thing. Now, I do want to kind of circle back to the idea, this series, series is about cash is king. So how does this help folks with that idea of cash is still king? We know that those that have the cash and those that are cash flowing right now are the ones that are doing well in this, in this economy right now. How does this all relate to that?
So it's very straightforward. We're all in business to make sure that we're getting paid. Sure. And when you're selling, particularly on credit terms, you need to make sure that if you're funding a particular client, that essentially that money ends up in your bank account. It's of no use if it's sat in someone else's.
Right. And, I'm sure, like you said, but between the onboarding and that continuing monitoring, that's just helping the health of your business too.
Absolutely. Yeah, you want to make sure you're dealing with good clients, and all business relationships are good, and there's very little risk to your business. Right.
And I mean, I'm assuming, and I'm just going to take an assumption here, but please correct me if I'm wrong, with the way things are changing and the speed of which we're seeing business and the economy changing right now, even if you've had longstanding relationships, even if you've been in the industry for 50, 100, 150 years as a company, and you personally have been in the industry for decades, and you're working with companies that are similar, you still need to be checking those. You got to do those rechecks and constant monitoring.
One of the, we constantly do research and speak to our clients, and one of the stats that just keeps coming out is 80% of bad debt comes from business relationships that have existed for over 12 months. So 80% of bad debt is to long-standing clients. It's not necessarily just the new accounts that you bring on board. So it just sort of reinforces the need to make sure there's checks. And I think it's very important to state here that we're not suggesting that you pull the rug from under the carpet and withdraw all credit. There's scenarios that each situation is very complex. But if you see a company that increases the risk of you not getting paid, you need to take the appropriate action, not necessarily just stop credit.
Right. Yeah. We, like you said, we give those suggested credit limits and the different things there, but it is based on your strategy and your rules and everything for the different companies.
And the risk tolerance of the business.
Of course. Absolutely. Yep. Yeah. Well, I think that covers all the questions we have here, Mark. And I think you've got that. You've done a great job just setting up this whole thing and starting us into this. And a lot of the stuff, folks, that Mark talked about are going to be talked about in these further webinars. The idea of leveraging business intelligence and data on how that can affect your business. We have 2 webinars on that. The idea of automation and integration, 2 webinars on that. And the idea of getting paid that Mark was talking about there, making sure that that money comes to you when you're owed it and not to somebody else or not being held by that company. We actually have 3 webinars on that, and how you're going to get paid and the idea of collecting your receivables. So that's all going to be coming up. Go ahead.
I said there's a couple of exciting webinars to look out for, Nathan. Obviously, John Siri, our Chief Technology Officer, is going to talk about integration.
Absolutely.
Taking the manual process that I talked about then and how to automate this.
Mm-hmm.
And Lino is going to talk about business intelligence and how that can be used in the business. It's going to be very exciting. Both
Absolutely.
of you guys are industry experts and have been around for a long time.
Absolutely. Yeah, we're going to have that. And then, like I said, we also have practitioner panels on every one of these. So every time that we're talking about something like this, we're going to have folks that are doing this on a day in, day out basis at various other companies that are not credit safe. So you're going to hear from us. After all, it's our webinars. Of course, you're going to hear from us, but you're not going to just hear from us. We're going to have other folks coming in that are doing that. And so before I talk more about that, Mark, thank you so much. It's always great to have you on. It's always great to learn from you and have you talk about these topics. So thanks for that.
Thank you, Nathan.
And folks, just like I said, this is a whole series. We've got a bunch more coming along. If you want to join in on the series, you can go to info.creditsafe.com/webinars, see all of our upcoming webinars. Our next one is actually Thursday, and it's the practitioner idea of this. So we're going to have Alvin Moreno from Nestle coming on and talking about how to do KYC at a company like Nestle and how they do this throughout the country and throughout the world, and how that looks for them, and how they're putting these best practices into practice at that company. So that's something you definitely don't want to miss. And then you can see the rest of our series, which takes us all the way up through November going forward. So thanks so much for being with us. I hope you have a great rest of your day, and I'll see you next time.